Hi, everyone. Welcome to the latest installment of Powering Business with Blockchain. I'm Lydia Chu, VP of Business Development at Avalanche and co-manager of the Blizzard Fund. Today, we'll be talking about the latest funds in venture investing in Web3 with some of the most heavy-hitting fund managers in the industry. So I'll pass it off to each of you to introduce yourselves. Please tell us a little bit about your background, your fund, and how you came to be a venture capitalist in crypto. So to kick us off, Haseeb, please.
Yes, thanks for having me. I'm Haseeb Qureshi. I'm a managing partner at a fund called Dragonfly. So we're a global crypto investment firm, been around since 2018. We invest everywhere across the stack, purely in crypto, from layer ones, layer twos, DeFi, NFTs, infrastructure. And in terms of my background, so I used to be a software engineer and an entrepreneur before I found my way into the venture capital world. And way, way, way before that, a long time ago, I used to be a professional poker player. And so I've got a variety of different experiences that led me to making the horrible mistakes of my life that led me to entering crypto. But it's turned out pretty okay.
A lot of risk tolerance there, huh?
Exactly.
Chris?
Hi, my name is Chris Perkins. I'm the president of Coin Fund. We're actually in our 9th year. We're also a crypto native registered investment advisor. We've got a series of strategies. We've got a pre-seed and seed strategy. We're in our 4th fund there. We've got a venture strategy, which is Series A and B. We've got a liquid strategy, which focuses on liquid tokens. And then we recently launched an index product, which is pretty cool, based on Ethereum. My background, kind of unique too. I was a U.S. Marine for 9 years. I'm an Iraq combat veteran. Then I did 15 years in traditional finance, all within the derivative space. And this is my 3rd year here at Coin Fund.
Thank you, Chris. And Brian?
Thanks, Lydia. Happy to be here. My name is Brian Johnson. I'm a partner, co-manager, Republic Capital, focused on the crypto side of investments. We have 2 baskets on our side. One is aerospace and defense, and one is crypto. And on the crypto side, we focus primarily on the DeFi, core infrastructure, NFT, and all user-focused crypto platforms, the L1s, the L2s, just like Haseeb mentioned. And on my background, the traditional finance route, investment banking for several years, and found my way to a family office. To make a long story short, investing in crypto and cannabis. At that time, they went hand in hand in 2017, 2018. We actually invested in the seed round of Republic, and there was an opportunity for me to move over to Republic and help build Republic Capital under the umbrella of Republic, which is right now the largest global investment platform for retail. And yeah, happy to be here.
Thanks, everyone. Sounds like we've got a lot of different perspectives, and I'm really excited to see where all of you are at with the current market, with the current macro environment, and just generally how the crypto space is developing. So, over the last year or so, 12 to 15 months, we've seen all the headlines. Like global VC funding generally is down 42% year to date. And then you've got crypto investing, which is down 75% year to date. So with all of that said, and everyone currently focused a lot in crypto, how would you kind of assess where the state of the crypto market is right now, and how has that impacted, or maybe it hasn't, how you guys are thinking about investments and opportunities in crypto now?
Well, the market has definitely affected the way that you look at investments, whether you're in crypto or whether you're outside of crypto. So a lot of this comes back to macro, which is that there's a very different interest rate environment, which increases the cost of capital on a relative basis. So that means that in order for you to make money on an investment, or in order for an investment to make sense, to make money, there's a higher hurdle rate. It's got to make more than 5% a year, because 5% a year you can make with 0 risk. So that just means that there's a category of startups that basically don't really work anymore in an environment where the risk-free rate is at 5%. So that's one part of it. Second part of it is that you've also seen a broader consumer pullback. A lot of this is tied to macro, but a lot of it is also endogenous to just the craziness of the last crypto cycle. There were a lot of people who were very enthusiastic about ideas that didn't quite pan out. We were sold a big story about the metaverse and about play to earn, or about, some of these narratives that didn't quite have the steam that they may have needed to in order to be sustainable. And these things have led to a reevaluation of the market and the industry. And the third factor is regulation, right? So obviously in the US, where I think the three of us are, the SEC has been on the warpath this year, trying to crush the industry as hard as they can. And I think most people at this point handicap the SEC that they're probably not going to be successful in their most aggressive attempts to just shut down the industry wholesale. But they can certainly cause a lot of damage, and they have. They've made it very difficult for people to operate the same way they did last year. And that also is a headwind to a lot of startups. So there's still venture funding happening. And there's still a lot of great companies and a lot of great founders who are innovating in the space. But the valuations they're getting are lower today than they were a year ago. And at the margin, there's definitely fewer things that work in an environment that is just more challenging. But there's still a lot of stuff happening in the space, which is why, the three of us are still here meeting with entrepreneurs and putting money to work.
I'm happy to pick up on that if it's okay. Great points, Asib. I think a lot of us have been through a lot, right? There's been incredible turmoil, but we're seeing incredible projects, and the projects and the people that are either entering the space now or have navigated through this cycle, they're hardened, right? And they're onto something. And so I think it's a very, very exciting time. Picking up on the regulatory theme, and I spent a lot of time on this, I'm on the Global Markets Advisory Committee, the CFTC. We're actually heading maybe more expeditiously towards certainty. And I agree with Asib. Like, the SEC has gone on this tirade of regulation by enforcement. And before that, they were saying, hey, we need more authority. Well, we didn't get it, so we're just going to enforce. The fact of the matter is that there are two very big things happening in the legislative space. You're just going to see the rollback of the Chevron deference. That's probably going to happen. You're going to see additional court cases looking at the major questions doctrine. And what this means is that we're going to achieve this certainty, and our entrepreneurs are every day that moves forward, they're having more certainty. And once we have certainty, we can build and we can advise them and we can help navigate. But at the same time, with all that exuberance gone, the people that are building, we're seeing some real product market fit. And Asib, I saw you talk in the Netherlands, we talked about stablecoins. Super exciting part of the market right now, right? I think it's over 120 something billion dollars of true product market fit, but 99.3% of it is dollars. And it's a $7.5 trillion a day market, right? So we can see where that's going. Tokenization starting to take hold. I don't say the R word. We can talk about that because I'm a banker and it gives me PTSD. But I think you're seeing what we've had, like over 600 million in tokenized money market funds. And so when you start thinking about institutional themes, that's happening. It's slower than maybe it was in the last cycle, but that's fine. That's how they operate. So, and we haven't even gotten to, and I imagine we'll talk about it, some of the other major trends that are happening, green shoots around social, decentralized social, green shoots around the intersection of AI. But the last piece I'll say is that as time goes on, it really works in our favor. And because we've seen throughout, there's a major generational divide in this country, especially, where some of the older folks, they just don't understand it. And as nature takes its course and we navigate forward, the younger generation is coming on and they're able to really understand, adopt, and then really build on technology. So anyway, I'm super bullish. I think it's an incredible time to get into the space. It's the right time of the cycle, and I will pause.
I'll just quickly add, I'm super bullish too. Agree on all your points, Chris and Asib. I will point out, to add to Asib's point, that back in 2021, 2020, there was a lot of cash flow in the system, and many funds since then that have stopped deploying or just have gone to the wayside altogether. And so there was a lot of projects, the metaverses, the play to earns of the world, that really just were gimmicks, not to be cruel, but there wasn't appetite for the actual retail users for those, and they were difficult to use, and the infrastructure wasn't really there for the adoption side as well. And so they really shouldn't have been hyped up as much as they were, but there was the push to deploy capital because there was so much out there. And so we have a come to Jesus moment in the venture space, and the funds with conviction are still here. Like, I'm sure Hasib remembers back in 2018 when the last bear market happened, his fund was still there and, waited out the bear and continued to invest in the bear. And that was the best time to invest. And so his fund, fund one returned, excellent returns for LPs. And we're seeing that again, history doesn't repeat, but it does rhyme. And so there's a lot of opportunity here. And the new projects, the great projects, the innovations are still happening. You have institutions behind the scenes building infrastructure and testing out various chains and testing out efficiencies, say for tokenizing their funds, or experimenting with tokenizing commodities like Wisdom Tree just tokenized gold. I can say it here. We haven't really announced it yet, but Republic, we're thinking about tokenizing gold as well, utilizing some frameworks that we've invested in, such as very zero knowledge compute stuff for off-chain data. But yeah, I mean, overall, it's still a very exciting time. It's just there is less capital in the space, but the good projects are still there, and those are still getting funded.
Well, you guys bring up all really great points and covered a very, very wide swath of area. And let's just drill down into a couple of those one at a time. Let's touch upon this very quickly because I don't want to spend too much time on it. But, Haseeb and Chris, especially, you guys mentioned the regulatory landscape, especially in the US, is constantly evolving. How has your fund navigated these challenges, especially with regards to investing in the United States? And does the landscape affect, what you choose to invest in? Does it change how the fund operates? Are you looking in other areas? Just kind of curious what your take is on this.
Maybe I'll let Chris answer first since I went first last time. Oh, Chris, you're muted.
Chris, you're muted.
I'm sorry. Yeah, I'll go for it. So we've taken an approach where we want to really maximize engagement. It's very easy to go, poking people on the eye on Twitter, generally not a great way to get policies accomplished. And our thesis has always been that one word or one sentence at the policy level, and I learned this in Dodd-Frank, frankly, was that it translates to billions of dollars of downstream value creation or value destruction. So we got to be engaged. And you look, a lot of people can do it through trade associations. We joined the CFTC's Global Markets Advisory Committee, and they asked me to look after a couple of streams. They said, Chris, we need policy recommendations on utility tokens and NFTs. And I said, well, that's great, but we also have some big problems around governance tokens. And by the way, there's this thing DeFi that we really need to get aggressive on. And so, we're taking the approach where we don't have all the answers. I certainly don't. So we're going to actually have a series of spaces coming up in the next days and weeks. We'll put it out where we're trying to get industry input so that, and we're really, it's great. We're going to get some of the best experts in the world to help us inform, particularly on the CFTC side, but that translates across to Congress as well. So that's great. And one of the problems that we've seen in our country is that we keep looking backwards, not forwards. And another thing that's encouraging for us is that other countries aren't doing that. They're moving out in front. You have the UK and you have the EU, they're fighting viciously over Brexit. And so I've been on the table with top officials in the UK banging their hands saying, come to my country, please, because we have to compete. And if you look at the relative success within Web2, many of these jurisdictions didn't do so great. So they see incredible opportunity. And so therefore they're on the front foot trying to come up with that nuanced proactive policy to attract entrepreneurs. And that's putting great backward pressure on the US. You go to the UAE, same thing, come to my country. Asia's super interesting as well. Singapore, Hong Kong, really fighting for primacy there. The Chinese trying to really galvanize their economy by waking up Hong Kong and embracing this thing called Web3. So again, time is on our side. Ultimately, we're getting that clarity in the courts. And how do we advise our companies? Well, first you have to know the regs, right? And in certain places, they're just not clear, and that's fine. Navigate them out of areas that are absolutely black and white. We can do that. We have a voice. We get them to voice it. And then really it's just helping them think through the various jurisdictions. The last thing I'll say is crypto's 100% global, instantaneously global. Very few industries are like that. And so that gives them an edge. But at the end of the day, it's all about engagement from our perspective.
Cool. Yeah. Only thing I'll add is that, so Dragonfly, we're pretty global. We have a big presence in Asia and Singapore in particular. And so one of the things, amidst this US crackdown on crypto, we are shifting a lot of our focus out of the US into Asia and just seeing what's happening there. And as Chris mentioned, jurisdictions that are a lot more open to what's happening in this industry. They kind of see the US's mistake as their opportunity. At the same time, as I mentioned earlier, I don't actually really buy the story that's coming out of the SEC, which is that crypto is evil and Americans don't want it and that it's going to all be, exterminated domestically. Clearly, the SEC is losing if that's their aim. And for the most part, it's still the case, despite everything that's happening, is that the single most vibrant city for crypto in the world today is New York City. It's where the most entrepreneurs are, it's where the most ideas are, and it's also where the most capital is flowing, even today, despite everything that's taking place. So that, to me, makes me still pretty sanguine that I don't think the US is going anywhere. It's got a lot of challenges, but it's obviously the biggest economy in the world. It's the most important market, and it's where the most innovation still takes place. So for us, we still consider America to be, the single most important country for what's happening in crypto globally.
I couldn't agree more on that New York point. Just
Hey, being in New York.
yes.
I'm not in New York, but we have a very big presence there. So I pay my respects.
It's a great point. I'm sitting here right now, and I couldn't agree more.
Oh yeah, so are you, Chris.
3 out of 4. All right. So thanks for the regulatory viewpoints. I think it's certainly something to be aware of, and everyone should definitely be cognizant of how things are shaping up, but that doesn't dictate where us as investors are really thinking about innovation, opportunities, and themes that we're generally excited about. So with that said, are there any, especially in this current market, are there any areas of innovation or emerging themes that are exciting? It could be geographically based, or it could be very specific industry within Web3. But maybe Brian, we'll start with you.
No, sounds good. Yeah, I mean, where to begin? There's a lot of interesting projects out there and a lot of new sectors popping up. AI and blockchain is one of them. And while it's still very new and the product market fit hasn't really been established yet, but there are aspects where AI improves blockchain, blockchain improves AI. We haven't invested in any projects yet that fit into that sector, but that definitely is something that we're keeping an eye on. I mean, one example you could think of is improving security for smart contracts. So, the biggest issue in the crypto space is security and hacks. It's, the most money stolen from any industry is in crypto. And what AI could do is be like a watcher of sorts for smart contracts. So in TradFi, you have this for trading algorithms, and typically you have your algorithms, but then you have a watcher algorithm. Basically, it knows these algorithms are supposed to behave this way, and if they don't, turn them off. So you could have effectively like a 24/7 white hat that basically monitors these smart contracts and knows the parameters and what they're supposed to allow. And if they don't behave a certain way, if someone figures out a loophole, or they're able to, extract more than they put in, they could turn those smart contracts off. And so that side is very interesting. Also, privacy is getting a lot of buzz, and I think it's very worth noting because it all ties back to security on the individual side. So sovereignty of the individual, like why does everybody have to know what I'm transacting in, what I'm voting on? The blockchain is all about transparency, but at the end of the day, I don't want everybody to know what I'm buying or what shitcoin I'm buying, whether it's Sonic Obama or something, or let's go Brandon coin or something crazy. So at the end of the day, especially as a fund too, like seeing what we're voting on and what other institutions are voting on, I don't think that's something everybody needs to know, but at the end of the day, it's about security. So those are two interesting points that we're keeping an eye on our side.
Awesome. Thanks, Brian. Haseeb?
There's a lot going on right now in the innovation side. So, one of the big themes from the Ethereum world is around layer 2s and the entire layer 2 stack. So there's layer 2s themselves, there's shared sequencers, which are basically ways to have multiple layer 2s live through the same ecosystem. You also have data availability layers, which are basically data storage, short-term data storage, which is a big problem right now in the operation of a lot of these layer 2 ecosystems. Then you've got a lot of stuff happening on the ZK side. ZK standing for zero knowledge proofs. A lot of innovation taking place. You see almost Moore's law like trajectory to ZK, that every single year they get better, they get faster, they get more efficient, and that's a trend that seems to not be stopping. It just keeps getting better and better. You've got a lot of stuff as well in more advanced forms of cryptography like fully homomorphic encryption, which very recently have kind of come to the fore as now being usable. So fully homomorphic encryption is this idea that you can encrypt certain data, but you can still run operations against it. So imagine that, for example, I want to run recommendations on your browsing history or your viewing history. Normally, an algorithm would need to see what your actual viewing patterns are. And you can imagine there are all sorts of other things they might want to do with that data once they have it. But fully homomorphic encryption, what it promises is that you can actually operate and run algorithms against this data without ever actually seeing what that data is that's underlying that encrypted mess that you're interacting with. And so that allows users to have a lot more privacy and a lot more anonymity, but still allow more complicated, higher level primitives like DeFi and like some of these other applications that we care about in crypto. Now, fully homomorphic encryption is still much earlier than, in terms of its coming down the cost curve and efficiency relative to other forms of encryption and privacy. But it's one that, again, we're seeing the step change improvement, and we're seeing them rapidly grow in their usability and their practicality. So there's a lot of stuff happening on a bunch of fronts. And then, of course, UX is another big story. There's native interoperability, there's intents, there's account abstraction. A lot of these things are going to make the experience of interacting with crypto and using wallets much simpler and much easier to do, and also with a lower on-chain footprint, which ultimately makes everything cheaper and more affordable for end users. So there are a lot of things happening to make blockchains better. And the beautiful thing about crypto is that because crypto is pure software, it's pure technology, it only ever gets better, and it gets better very quickly, and it gets better at the pace of anyone, anywhere, coming up with the next big innovation, and then it kind of spreads across the ecosystem.
Right. I think like many other folks, we've been spending a lot of time, particularly during this cycle, and investing in infrastructure. And the thesis was like, that's going to create the foundation that we're going to need to build, and it'll result in better UX. But it's funny, I was out with a friend this morning, and the conclusion was like, maybe we don't need UX. Maybe it doesn't matter. Why? Because the next cycle is going to be dominated more so by bots and AI, and they don't really care about UX. Right. So they're going to be able to navigate this infrastructure much more seamlessly. And so that ties into the other theme, obviously, AI and crypto, that intersection. So we've been spending time on decentralized stores, decentralized compute, proof of humanity for controversial projects like that we've looked at and invested in. So that intersection is very exciting. There's another one that people don't really talk about. I think about a lot. It's the staking economy. Right. So as we've moved away and we've seen a lot of staking going on, those are new interest rates. And I think those interest rates, the interest rate market in traditional finance is a $500 trillion market. It's the largest derivatives market in the world, let alone all the different products. That doesn't even count like futures and borrow and lends. And so now that we have proof of stake blockchains, I think that's going to be an interesting iteration in building out this staking economy. Gaming, Lydia, I know you're all over this space. As those second generation games start coming out, I think it's a very interesting place to be. And then the last thing I'll mention is DeFi. I think you're going to see a comeback on DeFi. I think a lot of the regulatory clarity is starting to crystallize, and it's going to come before too long. That'll allow us to scale. And I do think that there's going to be the next iteration of DeFi is going to be very exciting.
There are a lot of nuggets I wanted to definitely dive into here, especially around Chris, your most recent point about how in the next wave, a lot of the activity or a lot of the usage might be driven by AI or bots who don't care about UX. But up until this point, a lot of the use cases that we've seen, a lot of the applications and projects that are being built, they are very consumer focused. And that has been the case in Web 1, Web 2, especially in gaming. So how do we think about that evolving into more of a infrastructure foundational technology ecosystem as we get into the next wave? So this is kind of more thinking about blockchain itself as an enabling technology and less so about the application that exists on top of it. So I don't know if you guys have any thoughts about if someone is looking to build in the next few years, or maybe, or invest even, like where do you guys think the best opportunity here would be?
That's good. Should I take that? I'll take it.
Yeah.
I think, you mentioned gaming. So we do gaming now and then. And Chris, I hope you don't mind me jumping in on this because we both did it. And so I'll mention it because I know, this is the Avalanche topic, or a discussion. So we invested in Gunzilla Games, which is probably one of the most exciting projects for me because the team is very solid. They come from the CryEngine background. They built one of the top performing battle royales back in 2012, I believe it was. That game made $1 billion in 5 years, had 100 million unique players. To this day, still has 2,000 daily active players on Steam, last I checked, which is many crypto protocols and apps would froth over that idea. And they saw crypto as definitely the next frontier where gaming and crypto would merge, but they didn't want it to be on the front end to abstract away the basically the UX and UI hurdles that crypto has right now. And so they built a lot of their tech in-house. And for them, an Avalanche subnet what made sense for them. There wasn't as many options as there were today, like the SWI, the Aptos, various new move L1s, new L2s. Arbitrum wasn't around yet. And so by abstracting that away and giving them enough flexibility on the structure of it, the price of gas, the fact that they, built on an EVM first, but they could move over to, say, a move VM if the time comes when they want to add parallelization, maybe dynamic NFTs. And so that was a real important factor for them. And we, basically we were going to invest in them no matter what chain they chose, but we made sure to guide them on the way and help them find, the best chain for them at the time. I think that answers your question in terms of what you were looking for.
No, I think that definitely answers the question. And also, is that your favorite Avalanche project?
That is my favorite. I have a few others. Well, CoinFund and us, we did it together. And so, Chris, I hope I didn't steal your answer there.
You took my answer now. It's we're big believers in the game, and I think you're right. I think I said I made the comment about user experience. Certainly, it's going to be important on the consumer side, maybe less so in other places. But I think gaming is a super interesting place. I've got a 15-year-old. He's obsessed with it, and as it's just there's this weird paradox in gaming where like gamers are pushing back because they feel like they're getting preyed upon. I think that'll be abstracted away in time, and it's a very, very interesting place.
Awesome. And Steve, you mentioned, ZK and cryptography generally being deployed on chain to preserve privacy and data obfuscation. Like that, when I joined crypto, it was 2018, and I was trying to build out a cross-border trade settlement network on ETH. And a lot of that data needed to be hidden away off chain just because ZK was not really viable back then. There was just no encryption that would have preserved that data and done it in any kind of efficient way to handle the level of activity that comes with securities trading or commodities trading. So on the topic of like ZK and encryption advancing on chain, like what other use cases are you most excited about that tie into that a little bit, and just generally other use cases?
So there's two broad set of use cases for ZK technology. The first is around privacy, as you mentioned, which is, okay, I want to have important data that's being logged on chain, whether it's user preference data, whether it's financial data, whether it's, genomics. There's all sorts of broad category of applications that want to use blockchain for the immutability and the transparency, but they don't want to divulge everything about their end users to anybody who's looking. And so that's a place where ZK is a really powerful technique, where you can prove that this data is there. You can prove that you've even done certain transformations to this data, but you don't have to divulge the underlying data itself. right? This is a very important primitive. And the reality is that because this technology keeps getting better, we keep seeing massive improvements in the underlying like the development experience, such that, you know, 3 years ago, you really needed to be an expert in cryptography in order to understand how to use ZK in production or using it in mainnet. Today, it's much easier to get something off the ground and really just have, you know, a couple devs who can kind of read some docs and figure it out and put some stuff together in a library. Where today, you know, for example, if you're using HTTPS, almost every single website on the internet now uses HTTPS, meaning that when you're interacting with a website, everything is encrypted, both going to the website and coming back to you. Developers don't need to know anything about it, right? You just go on to Let's Encrypt, or you go get an SSL certificate, and boom, now everything you use on the internet is encrypted. You did not need to know anything. You didn't need to be an expert. All this is handled for you. That's the direction we're moving increasingly with ZK for privacy, is that it's going to become as easy as it is for the internet to just have things be private by default at the level that users and developers can understand concomitantly. Now, the second aspect of ZK is not around privacy, but around scalability. And this is increasingly a big story that's taking place, which is the beautiful thing about ZK is that with ZK, you don't need to redo the computation to know that it was done correctly. If you think about how blockchains work today, fundamentally the way that blockchains work is that we want to do some computation. Let's say I want to send some money and compute the ledger to make sure that we have exactly what the right balances are. That's a computation. The way that blockchains work today is that if I'm like, hey, I want to move money from A to B, and everyone recompute the ledger based on what that does to the state of everyone's balances. The way that we get to consensus in blockchains today is that everybody who's a node in the network, let's say all 5 of us are different nodes in the network, everybody who's a node in the network does the computation themselves and make sure that everyone got the same answer at the end, right? That's how blockchains work, which means they work through redundant computation. Everyone redoes the exact same work. That does not scale. That is why blockchains are so compute constrained. That's why you can't do machine learning. That's why you can't do games fully on chain. You can put some of the assets on chain, but you would never do the entire game engine on chain, right? That's crazy. We've learned that that's how blockchains have to work, is they have to be compute constrained. What ZK promises is that in the future, you can get to a world where instead of everyone doing the computation redundantly, only one person does the computation, they generate a proof, and they post the proof of that computation on chain. And from the magic of ZK, no matter how long the computation itself was, let's say I'm training a machine learning model, which is, again, insane. You would not do that on chain. But let's say I did that. That is a huge, incredible, tens of millions of dollars of compute that I'm putting into training this machine learning model. But I just generate one proof, which takes logarithmic time. I post that proof on chain, and anybody can verify without having to redo the training themselves that, yes, I correctly trained this model according to these steps of computation. That can be done today. It's extremely expensive to do today, but you can do it. That, I think, is the direction that all blockchains will eventually go over the next 10 years, let's say. And that is, in the long term, what gets me really excited about what's happening in cryptography.
If I could add, and that will allow and really empower a lot of the work that you guys are doing in Evergreen and Spruce, right? Institutions require privacy. It's core to their function. Institutions require scale. Very, very important. And the last thing that institutions are going to require is compliance. And so, like, as you start looking at subnet infrastructure, if you're able to deliver those 3 things, we say the institutions are coming, they're here, they're coming in their own way, and they're legging into this. But those are all the ingredients that are needed for real, true institutional adoption.
Yeah, those are certainly the 3 requirements in all the conversations that we continually have. It's always, how do I preserve either our own institutional data or our clients' data or our position data for a fund manager? All of these things need to remain confidential to the actual institution. And that has been the hurdle of bringing it on chain. And that was one of the reasons why the institutions were coming, but still hadn't come in the last cycle. And I believe is a big reason for why we're all very excited for on-chain assets and tokenizations of traditional assets and just bringing them on chain. But with that said, as we kind of get down into more forward-looking ideas and themes, I guess looking into 2024, is there anything, what are your predictions and kind of expectations for how crypto and blockchain will evolve? We'll start with Chris on this one.
Oh gosh, pulling on the institutional adoption stream, I think you're going to start seeing, more and more of that with the number of different announcements. I think there's going to be a very intense focus on AML KYC sanctions compliance. And so like we kind of go through these weird cycles where it's like DLT, the no public, probably going to see something more hybridy for the institutions on being able to operate in that compliant environment. I think we're on a road to regulatory certainty, which we're excited about. I think the elections are going to turn over quite a bit. I think it's going to be a comeback. I think 24 is going to be a big time comeback for the crypto industry as we go through cycles, right? Like 2018, like is crypto going to make it? No one's doubting that crypto is not going to make it. It's here to stay, right? The genie's out of the bottle. How will it emerge from some of the volatility we've been through? I think it's going to emerge stronger. And I think you'll probably see institutional adoption ramp up. And why? Like, what's the whole point? Because of utility, right? What is the utility that we're going to see them realize? Number one, mitigation of settlement risk or HRStat risk, right? Being able to settle instantaneously lowers risk profile. Elimination of counterparty risk. These are things that I used to be at Lehman, like big deal. Like, people ignore it until it's too late and then they really suffer. So elimination of counterparty risk. Cost efficiencies, getting rid of intermediaries where it makes sense, for more cost efficient transaction. And I think that's all possible. So I think you're going to see continued growth and adoption of the institution predicated on some regulatory clarity and some of these other technology barriers that we're looking at. And then look, I think we invest across so many different verticals, right? And all of those are advancing. And so, we talked about various things that to expect. So whether it's more in the intersection of AI or resurgence of DeFi, I think you're going to see great progress across all. The ETF, like let's not forget, ETF is going to come. I personally think it's going to happen this year with the Bitcoin ETF. That's going to breathe life back into the ecosystem and excitement, and I think you're going to see that really lead to some tailwinds in 24.
We've already seen some, tailwinds breathe life into with Larry Fink and the IBTC. It did the whole crypto thing where it was back and then it was off and then it was back again on the DTCC you saw. And so that was funny to see. And, there's never a dull day in crypto, but definitely the innovation pushes forward. And I'm very excited for the future. In 2018, you had the naysayers say that crypto was a solution looking for a problem. But now, it's actually very clear that there are problems to be solved and we are solving them. I mean, from the ZK identity side, my own personal issues. My name is Brian Johnson. Shockingly, there are thousands of us. And there are thousands of us with the same birthday. And so I've had issues over and over again where people have been able to convince other institutions that they are me. With ZK, that this potentially could be solved, where I now have the only keys to prove that I am me. Even the government has issues when I come in for global entry. They think I'm another Brian Johnson. So I would hope that they would adopt this technology so I can save my head.
It's tough to be you. I did not realize this was such a big problem. I will say, as someone named Haseeb Qureshi, not something I can empathize with, but I feel for you, man.
I couldn't tell you how many times I've been brought into that back room, sit there, thinking that, and them looking at me like I am literally trafficking something.
Chris,
I've got something for you, buddy.
You never know. Yeah, no, exactly. I signed up for that just because. And so, people have bashed me for signing up for that. But also at the same time, I was like, you have never sat in that room for 2 hours just trying to get home at the airport. So I hope they do adopt it. It's I've had funny stories, but they haven't been too serious. But again, with harping back to, we definitely need user adoption. It's definitely coming. The safety. I don't feel safe enough to have my mom put a bunch of funds on the blockchain or get into DeFi. She can use Coinbase and buy various L1s and stuff. And I think that does have value because it is the backbone, the gas of these ecosystems that hold a lot of funds for those who are willing to take the risk, like myself, and funds. And so, you know, in a nutshell, it is going to be the new backbone of the digital economy. I very much believe that. On the institutional side as well, you have all these intermediaries that are taking fees like DTCC for settlement. Once you have 24/7, 365 settlement, you potentially get rid of their need to be around. And that's billions of dollars of efficiency right there. They'll probably fight to make sure that they still are around at the end of the day. And it's going to take a long time, I imagine. But that's something that crypto fixes and builds efficiencies around. We have clear paths to innovation, like Haseeb said with ZK. FHE is very exciting. On the gaming side, while most gamers hate crypto for the wrong reasons, I would argue that Axie Infinity kind of ruined it for them, where you had to pay $3,000 just to play the game at one point. That doesn't make sense, but we actually have models now that do make sense, where the blockchain is kind of abstracted away and you basically can just bridge to the main chains, like away from the portals of those games where they don't get hit with money transmitter issues, and you can basically cash out in cash. And yeah, I mean, there's so much more that I could harp on, but I know we don't have much time. But that's in a nutshell for me.
Thanks, Brian. Yeah, no, those are all great points, and especially with consumer adoption and how to drive that forward. We definitely need that for the technology to become more widely adopted. So that's definitely one path of the journey. Haseeb, what do you think is in store for 2024?
Yeah, look, if I were to characterize 2023, I'd say 2023 has kind of been a year of healing. And, we haven't touched on this much so far in this conversation, but crypto fucked up pretty badly last year. And in a way, what we're doing this year is very much paying for those sins. We're having this conversation against the backdrop of the SBF trial, which I think is on break right now, but is going to start up again on Monday. And it's one of these trial of the decade type events that the whole world is watching. And it's felt very much this year like the entire industry has been on trial in a way, of whether it's from regulatory agencies, whether it's from people kind of looking back and saying, what did I do? A lot of organizations, which at one time were kind of stalwarts in the industry, basically toppling over, and all their dirty laundry has been strewn out on the floor for everyone to pick through. And so I think as an industry, there has been a lot of soul searching and figuring out, okay, what's been real and what's been bullshit? What are we actually doing here? What is the change that we were trying to make, and what was us getting high on our own supply? And this year, I think, has been us trying to figure that out and kind of untangle the mess that we made of a lot of things last year. But I expected this to be a lot more somber of a year, and the year that we kind of get all of our baggage sorted, so that come 2024, we have a clean slate with which to start rebuilding things and rebuilding credibility with consumers. And what's been surprising to me is how fast that all happens, it seems. Right? We're now at a point where Bitcoin is worth more than it was even before FTX collapsed. Actually, interest rates were at 1% when Bitcoin was last worth $34,000, which tells us that the world is already ready to move on. Even before any of this stuff we've done the full accounting, people don't think that crypto is going away. They don't think smart contracts are going away. They don't think Bitcoin's going away. And so it tells me that at the same time, I thought it was kind of be this act of contrition. We kind of look in the mirror of reflection and we figure out, everyone says what they did wrong. But that's being done simultaneously as us moving forward. And so my sense is that 2024 is going to be a really powerful year for a few reasons. One is that the macro environment looks like it's set to improve. The interest rates are set to probably start going in the other direction by the end of next year. We're going to get a new election. It's very likely that's going to breed some new ideas in the US about how we take an attitude towards crypto. And the most obvious thing is that everyone just moves on. So these cases finish, we get some verdicts, we stop talking about FTX, and we stop talking about the different shadows that all of these things that happened in 2021 and 2022 cast over the rest of the industry, and we just fucking move forward. And to me, I think that's probably the most bullish thing for us as an industry, is that we stop getting stuck in the past and we start looking forward to what's coming next.
I think
Amen.
we need to brand a new tagline for crypto going to next year and the years beyond, which is just like, let's fucking move forward. So I'm gonna make like a sign. We're gonna do a design on this.
Totally.
Um,
I'm down.
I'm gonna send it all to you guys as like bumper stickers. So I
Do
think
it,
for the
please.
last,
For my computer.
yeah, I'm serious. I'm gonna do it. And then just last question as stewards of capital here, but also supporters and enablers of our portfolio companies. What advice would you impart to founders who are building and also looking to fundraise? This is a very relevant question right now, since if you look at all the historical data, valuations have been down. There have been more down rounds in this year than in previous. So I think it's a very, very appropriate time to kind of help founders out there get a sense of where they should spend their time. So any advice? Starting with Brian?
Yeah. The world is on fire, and you never know when a new war is going to pop up these days. Aside from that, you definitely want to assess and at least have 2 years of runway, I would say, at a minimum, if you're raising, build for long-term sustainable models, engage with the community, be prepared for regulatory hurdles, tailor pitches that highlight the narrative current to market challenges, I would say, and make sure that there is a path to product market fit. And if you do all those, you should be okay in terms of fundraising, I would say. And definitely it comes down to the founders as well. Like, you have to be, I would argue that have a co-founder is preferable, and really harp on sectors where there needs improvement, and actually is not just we're a DEX on XYZ chain or something, actually something that is needed in the space, and actually is, for lack of a better term, an obvious trade, I would say.
Steve?
Yeah, I would say probably three things that I would impart to a founder who's navigating this environment. The first thing is simplify, focus. 2021, 2022, there were a lot of side quests, a lot of things to get distracted with. There were a lot of people were convinced that, like, oh, I've already got my thing. Now I'm gonna do these 2, 3 other things. And now is the time to pare away. That may mean having to learn to do more with less, cut your burn, make sure that what you're doing is sustainable, and focus on the bottom line. So that's number one. Number two is, make sure that you are in it for the right reasons. If you got into crypto because you thought you were going to get rich quick, you're not going to last in this kind of market. And be honest with yourself about that, because I think a lot of people have fooled themselves that they are true believers when they're really not. They don't really believe in the mission that they signed up for. And that's okay. It's okay to admit that to yourself. And it's better for you and for everybody you're with to clarify for yourself what the battle is that you're willing to fight. There are a lot of these, there are a lot of things that are being built that are going to take many years to come to fruition. When I started investing professionally in 2017, 2018, it took many years for a lot of these projects to get real product market fit. Avalanche was started, I think it was 2018 that Avalanche first began. Nobody gave a shit about Avalanche until really like 2020, 2021. That was when people started to realize that, like, hey, we actually need scalability. We actually need an alternative to what Ethereum is offering. The same thing was true for a lot of things in DeFi. DeFi was tiny. It was a little, it was garage experiments. It was people playing with beakers in their closets. No one cared about DeFi until 2020 rolled around. And unless you have the conviction to really work on this stuff when nobody else is watching and nobody really cares what you're doing, then you probably don't have the longevity to be able to make it to when the world finally does turn on to what it is that you're building. And then lastly, you mentioned down rounds and valuations being challenged. That's absolutely true. And it's happening across, not just in crypto and not just in tech, it's happening everywhere in the world on everything. 2020 and 2021 were aberrations in the way that we ended up valuing financial assets. And we're probably not going back to that world anytime soon. So I would encourage founders and just anybody running a business to make sure that you're thinking about valuations and you're thinking about capital in the right way, which is that your valuation is not a grade. It's not some measurement of how good of a person you are, how successful you are, or how awesome you are. It is a tool. Valuation is a tool in order to give you the capital that you need in order to build the thing you're trying to build. That's it. That's all it is. And markets go up, markets go down. They do all sorts of crazy stuff, especially in crypto. They do crazy stuff. But it's important not to get distracted and to make sure that your eyes on the ball. What do I need to deliver the thing I have to create to make blockchains better, to benefit my users, to improve the world? That's it. And in the long run, the rest of it will figure it out. And if you build something valuable, the world will reward you. But in the meantime, it's going to do all sorts of craziness, as it just did in the last few days and as it's done over the last year. So don't let that distract you from your overall goal.
That's great advice. I think you still see pockets of hype, and you will continue to see pockets of hype that could lead to exuberant valuations. And that's not the thing to reach for. That could get folks in trouble. But what I think is focus on utility, right? What are you trying to solve? And focus on delivering that utility. Avoid catastrophic risk, whether that's like knowing the regulatory situation or otherwise. Know your gaps, right? Know your weaknesses. Be very self-aware of where you're not good, and align yourself with partners that can help close that gap, right? Understand, when you're building a cap table, who's best to be on that cap table to help build out those areas that you might be one hell of a programmer, but you don't know anything about marketing or people. Maybe you do. But how do you align yourself with those resources? And being self-aware is a huge part of that.
Amazing, fellas. Thank you. So if I could sum up, it sounds like 1, be prepared, either in runway or roadmap or just managing the risk in the world. 2, focus on your strengths and simplify. And 3, be strategic about finding your partners, if I could just summarize.
I think that's
Exactly.
Yeah.
That's perfect.
Amazing. And one last thing, I just wanted to give you all an opportunity to let our audience know where to stay updated with either yourself or your fund. So Chris, anything you want to share on that front?
Yeah, my Twitter's PerkinsCR97, website's coinfund.io. Thanks.
Hasib?
Yeah, just Google me if you can spell my name. It's Haseeb, Haseeb, and you can find my Twitter and follow along from there.
Brian?
Yeah, search on Twitter. I forget what my Twitter handle is now. I think I changed it recently.
Yeah,
But
are there thousands of you on Twitter?
yeah. There's
That's why
many.
we can't Google you. You need to tell
Actually,
us.
no, I did change it to it's @many_R Brian. There we go.
Got it. All right.
Or you could
Appropriate.
I'm on LinkedIn or something.
Amazing. Thank you everyone for tuning in. Don't just stay updated on everything happening on Avalanche. You can follow the main Twitter account at AVAX, and you can follow me at Encyclopedia. Thank you very much.
Thank you.
Thanks, guys.
Thanks, everybody.
Bye, everybody.